I'm Dan Kraus, founder of the Stock Investor Studio, and this is game-changing stock market news of the week. My take on this week's stock market news that matters. This is episode 103, week commencing Monday the 14th of June, and in this week's episode, we're going to be talking about Bitcoin, Tesla, Apple, AMC, GameStop, the meme stocks, Facebook, Lordstown Motors, DraftKings. Also, we're going to be talking about the retail stocks and the whole overall retail sector. We're going to be talking about Royal Caribbean, a company called Shift Technologies, one that I really like, General Motors, and a few other names. Right, if you haven't already, please subscribe to my YouTube channel using the button below at the bottom of the screen to get notified of these weekly updates. And at the end of this video, if you've enjoyed it, please hit the like button. And lastly, there's a quick disclaimer at the end of this video. Take a quick look. Right, before we get started on stocks and crypto, massively influential over the stock market this week was the Federal Open Market Committee meeting, which is known as the FOMC. This is hosted by Jerome Powell. He's the chair of the Federal Reserve, the mastermind where US interest rates go. And obviously, these interest rate decisions massively sway stock markets and affects your money and my money. So in 30 seconds, here's what happened. They've kept interest rates on hold this time around, but highlighting that inflation is creeping in. The biggest market moving development out of the Fed's announcement was the change in its dot plot, which outlines the expectations for interest rates and is a chart showing the individual committee members' opinions on monetary policy, right? Things like interest rates. Now, that data came from the dot plot, which now suggests up to 2 interest rate hikes likely by the end of 2023. Previously, this dot plot had shown that only 1 hike would likely be necessary in 2023. Markets reacted negatively this week and were under pressure. They're still under pressure as of this Friday. US futures are heavily down at the moment whilst I'm talking. And this has really been negative news for the overall market. In summary, interest rates are coming. So look out for that and just be wary and make sure you manage your portfolio appropriately. Right, onto cryptocurrencies before stocks. Bitcoin news. There's always Bitcoin news. Tesla CEO, who else? Once again, single-handedly moving cryptocurrency prices, namely Bitcoin. Earlier this week, Bitcoin broke above 40,000 after he tweeted that Tesla may once again accept Bitcoin transactions at some stage in the future, but only when there's a confirmation of a reasonable, meaning 50% or more, clean energy usage by Bitcoin miners. So once again, in summary, this means that you might be able to buy your Tesla car in the future with your Bitcoins. Also in Bitcoin, the highly profiled fund manager, his name is Michael Saylor from a company called MicroStrategy, a really big investment fund. This matters because he's famous for buying thousands and thousands of Bitcoins. Well, he's been buying more Bitcoins and lots of them. He recently raised $500 million in a debt sale, which all those proceeds were used to buy more Bitcoins. And this week, once again, he filed for an at-the-market equity offering of up to $1 billion, all to buy Bitcoins. What is he seeing? Why is he buying so many Bitcoins? I'd be paying close attention to his decision making. He's widely followed, so just keep an eye on that. His firm already owns up to 90,000 Bitcoins, and these 2 recent capital raises could enable them to buy an extra 37 or 38,000 Bitcoins at current trading prices of around $40,000 a coin. Now, remember that there's only going to be 21 million Bitcoins that will ever be created. And his fund is publicly listed, trades under the ticker MSTR. So keep an eye on it. Onto stocks, Coinbase, one that I really like and I personally own in my portfolio, this week received approval to launch their very first 401k platform for cryptocurrencies. This is a very, very interesting step forward within their business. Also, they'll begin offering margin loans of up to 40% of the value of one's crypto assets. So I'm expecting really a big increase in user transactions. Remember, crypto volatility is excellent for their business model, and more crypto volatility means more people trade, which means more transactional revenue. In my previous videos, we spoke about Coinbase and why I really like it. So moving on to Apple, they're reportedly planning a new watch and a new Apple iWatch for the next year with a refreshed main model and apparently introducing a new extreme sports model. Now, Bloomberg sources say that the upgrades will include things like an improved display, much faster performance, and also a body temperature sensor. Why this matters? Because products aside from the iPhone have now become so important to their top line revenue numbers. Keep an eye on those developments. I like Apple stock. It's been a laggard of late and it's underperformed in the past few months. I own it and I'll continue to hold. Right, let's move on to meme stocks. Morgan Stanley CEO this week saying that the big run up in the likes of AMC and GameStop and other meme stocks could be a recipe for disaster. Guys, I agree. I'm sorry, don't hate me for it, but please understand, buying into meme stocks, or stonks as some call it, is not investing. I really think it's like gambling. Please be careful. You know my take. I would much rather be invested in high quality, reputable companies for the long term. So just a word of caution or a warning: if you trade these stocks, they're high risk. Yes, some people make money from these meme stocks, but it's not guaranteed. Very, very few that do make money, are smart enough to also sell it, when they go to the moon, or somewhat to the moon, right? So they're selling and they're banking a hefty profit. Remember, when they're selling, someone's buying their stock, and those buyers are very, very likely to lose. So just a word of caution. Moving on to one of the key electric vehicle manufacturers, Lordstown Motors. They IPO'd in 2019. It's a huge drama this week surrounding that stock. Stock has been under immense pressure of late. Here's why. So both the CEO and the CFO of the electric vehicle startup resigned this week. They also announced that they're almost out of cash. Now, this is terrible news. They need cash to grow the business. They're a startup almost. So this really sunk their stock price around 20% or so at the beginning of the week. Remember that this company bought the shuttered General Motors plant in Ohio back in 2019. They're operating their facility out of that branch, and investors initially loved this stock, looking for the next Tesla, impressed by really the number of pre-orders and plans to start production on its electric truck. The stock climbed more than 200% last year. So also, famous short seller Hindenburg Research accused Lordstown of inflating its pre-order numbers and its production targets. Then just 2 days or so ago, Lordstown Motors rebounded after its new chairwoman said that production for its electric pickup was on track. So it's a little bit all over the place. It's very, very volatile. If you're holding the stock, I think you need to seriously reconsider your position. I'm not saying buy it or sell it. I'm just saying if you're okay with the risk, just reassess your risk. For the long term, they might come out of this, but they need to probably raise money at some point. I'm not entirely sure. And if they do come out of this, I think it could be a good stock to own, but it's a very, very difficult situation at the moment. Just remember also on a side note that Hindenburg Research is the same company that led to the departure of the executive chairman Trevor Milton at Nikola Motors, and you guys remember how that stock sunk on the back of that news. Talking about cars, used car prices have been ripping higher as demand rises and supply is heavily constrained. This is massively pushing up used car prices. So the used car market is booming, which leads me to a stock that I really like in the used car market. They're called Shift Technologies. They recondition old cars at really cheap prices, and it's all online type of stuff. And this week, broking firm Piper Sandler initiated the stock with a buy rating, saying that they are the most undervalued of the 3 online car retailers. On a price to sales valuation, they trade on just 1.5 times versus their peers, Vroom, that trades at 3 times, and Carvana, which trades at 5 times. They're also projected to grow their business by some 200% in 2021. So I think it's worth looking into them. The ticker is SFT. Again, this is not a recommendation. I'm not telling you to buy. I just think it's interesting. Just want to highlight it. I think that there's a lot of growth ahead for this type of business. And a very quick disclaimer, I do own the stock. Right, let's talk about online betting. DraftKings stock falling this week after, again, Hindenburg Research reveals that they've taken a short position in the stock. Yes, this is the same company that we spoke about earlier with Lordstown Motors. In the report, Hindenburg compares DraftKings' valuation to that of rival firms and questions the company's promotional spend and future potential in the highly competitive sports gambling space. The report also alleges that SB Tech, a European technology company that merged with DraftKings, generates significant revenue from very questionable gambling practices in its overseas markets, particularly in some of its Asian markets. So DraftKings thereafter came out and said SB Tech does not operate in any illegal market, so keep an eye on DraftKings. Let's see where it goes from here. Talking retail sector and retail stocks, surprisingly, the apparel industry has been ripping. Why? Because as life gets back to normal and consumers start to head back to the office and go on vacation, there's all of a sudden a desperate need for a wardrobe makeover, and clothing sales are literally soaring this year throughout the whole US. So who wins? The likes of Target, TJ Maxx, perhaps someone like a Levi Strauss, maybe like a Lululemon, a Gap, and many others, of course. So on a relative basis, I'm not entirely sure who is outperforming who, but I think a good exercise to do would be to look at each other and look at their valuation and their growth trajectory. And you might find some clothing retailers that look relatively cheap on a valuation basis, so keep an eye on those. I think worthwhile doing a bit of research within that sector. What else caught my eye? Royal Caribbean earlier this week said that it is postponing the inaugural sailing of the Odyssey of the Seas cruise ship from the 3rd of July to the 31st of July due to 8 crew members testing positive for COVID-19. So just be careful, guys, when you're when you're short-term trading the cruise stocks. This type of news could be quite influential. It depends how long the delay is, I guess. The stock price, however, on this specific news didn't react. In fact, it barely even moved the stock price. Traders and investors are looking well beyond the short term and looking for the companies, or looking for these cruise companies, to see how they fare in the future and how the recovery looks overall. And it's really unbelievable that, that Royal Caribbean and the overall sector has almost tripled off its pandemic lows. So clearly investors are really liking the cruise stocks. In fact, just this week, JP Morgan saying that Royal Caribbean is their top pick within the sector and still sees a lot of upside for the overall sector. We're moving from the seas to the streets, and news out of General Motors, ticker GM, this week announced that they're boosting global spending on electric vehicles by 30%, up to $35 billion. Now that's from 27. They're increasing their spend by $8 billion. That's through 2025. Now, Mary Burroughs, the CEO, she was on CNBC this week, saying that they're seeing incredibly good customer feedback on their upcoming EV launches. The new electric Hummer, have you guys seen it? I think it looks amazing. Also, big news out of GM, they're adding 2 more US battery plants, which will enable them to cut battery costs substantially by up to 60% for battery cells. Now, adding these 2 plants, why it matters? Because they'll become much more profitable down the line. The stock has already had a huge rally, but I wonder if this one's got a lot more upside if you hold it for a number of years. I really like the stock. I don't own it. I feel like I've missed out in the short term, but I wonder if this is a great one to own still for a number of years. Right, moving on from the streets to the skies. More than 2 million air travelers were screened this past weekend for the first time since March 2020. Why is this important? Because of the reopening trade. Who benefits? Airline stocks, travel stocks. So airline stocks, hotel and leisure stocks. The pace of the economy reopening is really incredible. So just keep an eye on those. They've already had big runs up, but I wonder if there's just more upside. And speaking of tech, Facebook is going to start showing ads in their Oculus headsets, which will be a new era for virtual reality. So earlier this year, Facebook began testing ads on the Oculus mobile app, but is now expanding them to actual devices. Now remember that Facebook, which gets more than 97% of its overall revenue from ads, is one of the biggest players within virtual reality headsets. Now, by way of the Oculus headset, they've been buying tons of small VR gaming companies and establishing themselves really as the most dominant player in virtual reality. So Mark Zuckerberg was saying that VR headsets could become as dominant as phones and computers in the future. The big question is, could this become a massive new revenue stream for them? Now, I own Facebook. I love the stock. I'm going to continue to own it. They're doing great things. Lastly, last thing for the day on tech before we end. If you own NVIDIA, well done. The tech chip maker jumped about 5% yesterday, posting its 4th consecutive record high close. Stock is around $750 a share. Jefferies Investment Bank raising its price target on the stock. So if you own those, well done. I think there could be more upside, but wow, it's had a massive run already. Right, if you have any questions or you want to chat to me, please reach out to me through my website. That's it for this week. Have a good weekend. We'll see you guys next week.